At Mortgage Renewal, Canadians are seeing their mortgage payments go up by as much as 46%. If your mortgage is up for renewal, what can you do about it? In this video, I'm going to show you how to get ahead of the game and reduce your mortgage payments. That's coming up right now. Welcome back, Victor here, taking you behind the scenes of mortgage financing to help you get the mortgage you deserve. First things first, if you're new to this channel, please hit that like and subscribe. And I normally don't ask this, but please also share this video. Why? Because many Canadian homeowners are deeply concerned about their mortgage renewals. We've seen all the recent headlines such as these. From the Financial Post, 3.4 million Canadians will renew their mortgages by 2025, and they're worried. And this one from the Globe and Mail. Canada's economy faces $900 billion mortgage renewal shock. The fact is, everyone is talking about it. Perhaps you too worry that your mortgage payments will become unaffordable, or even worse, that you'll have no choice but to sell your home. The good news is you can do something about it. For example, did you know that come renewal time, you can in fact switch to another bank without a penalty? Doing so can get you a better rate, make your mortgage payments more manageable, and reduce financial stress. I'll explain how that works in just a moment. The point is, most people are completely unaware of this, so let's get the word out to as many homeowners as possible. You might be asking, how much will my payments go up? To find out, let's look at what the Big Six banks charged for insured mortgage interest rates over the past 5 years. This data is available on the Bank of Canada's website. The red line represents 3-year fixed rate mortgages, and the blue line represents variable rate mortgages. So to answer your question, it depends on when you got your mortgage or last renewed it. For example, if you took out a 3-year fixed rate term in 2021 at 1.84%, you're looking at a renewal rate of 5.94% for the same term. Your mortgage payments would increase by a staggering 46%. Even worse, if you took out a variable rate mortgage, you may have already seen your mortgage payments increase by as much as 70%. At the start of 2022, a variable rate mortgage from a Big Six bank was around 1.5%. Today, it's more like 7%, a huge increase. How much your mortgage payments go up also depend on various other factors, such as the frequency of your payments or the amortization period. If you want to get a better idea about your situation, feel free to contact me and we'll work it out together. So, let's talk about the mortgage renewal process. Banks make it really easy to renew your mortgage. Typically, they'll send you a letter 30 days before the maturity date. All you have to do is choose a term and a rate. If you think about it, this seems all too convenient. The question is, should you just accept whatever the bank offers you? For most people, the answer is no. You see, it's very unlikely that your bank has offered you their best rate. I see this all the time from clients looking to switch. There could be a few reasons for this. First, the bank doesn't know about your current financial situation. They don't know if there's been a change in your credit score or income, for the better or worse. Second, they could, and excuse the pun, be banking on the fact that you'll take the path of least resistance and just sign off on their offer. Maybe they hope you won't do some research and discover that you have other options. They may even pressure you to renew early in an effort to lock you into another term. Regardless, if you're worried about your mortgage payments going up, you need to explore other options. So, what can you do to get a better rate, make your mortgage payments more manageable, and reduce the financial stress? Here are 3 mortgage renewal strategies that are not likely to be mentioned in your renewal letter. You'll soon understand why. What's available to you will depend on the type of mortgage you have. The first option is called an insured switch. If you bought your house with less than a 20% down payment, this applies to you. The second option is called a collateral mortgage transfer. If your mortgage is combined with a HELOC, this applies to you. Product examples include Scotia Step, TD FlexLine, and RBC Homeline. And the third option is refinancing, available if you have more than 20% equity in your home. Let me briefly explain how each option works. Option 1, the insured switch. This involves moving an insured mortgage from your bank to another lender. In other words, you're simply switching lenders. It's quick and efficient because the new lender takes over your mortgage without changing the balance owing or the remaining amortization period. However, what does change is your rate and term. This can help your mortgage payments become more manageable and even save you interest along the way. Additionally, there are no legal fees or appraisal costs to make the transfer. Consider this case with a mortgage balance of $500,000. They were offered a renewal rate from their bank of 5.79% for a 5-year term. Through our brokerage channel, we got them 4.99%, saving them $220 a month and almost $19,000 in interest over 5 years. Yes, it really pays to use an experienced broker to get the deal you deserve. Option 2, the collateral transfer. Similar to an insured switch, you can move a collateral mortgage from your bank to another lender without changing the balance owing or remaining amortization period. But you can change the rate and terms to suit your needs. There was a time when HELOCs were very attractive because of their flexibility and low variable rate. But if your mortgage payments have become too high to manage, this may no longer be right for you. The good news is that you're not stuck with your bank. Through the brokerage channel, you have many options available. Consider this case where a homeowner has a $500,000 mortgage together with a HELOC balance of $100,000. Their bank offered them a renewal rate of 7.14% for a 3-year term. The HELOC rate would stay at prime plus 0.5 or 7.7%. We combined the mortgage and HELOC into a single mortgage and moved it to another lender. The new fixed rate on a 3-year term was 5.54%, saving the client $410 a month. There are many more ways to take advantage of a collateral switch, which is why it's important to talk to an experienced broker. Feel free to reach out to me. As always, I'm happy to help. Option 3, refinancing. Unlike a switch, refinancing involves replacing your mortgage. You can refinance with any lender of your choice. You can also increase the amount, extend the amortization period, choose a better rate and terms. Many homeowners take this opportunity to pay off other high-interest debts, like credit cards and car payments, using the equity in their home. This effectively reduces all their monthly payments into a single, manageable mortgage payment, increasing cash flow and reducing financial stress. If this is your goal, refinancing is an option worth considering. To recap, we talked about 3 strategies: an insured switch, a collateral mortgage switch, and refinancing. Each has their own advantages to help you reduce the mortgage payment shock come renewal time. Before concluding, I want you to consider the following 3 things. First, with any of these options, you do need to requalify. But if your credit is good and your income is stable, then there's no reason not to try. Worst case, you know you tried and no harm done. You stay where you are. Best case scenario, you get a better mortgage with great features and lower payments. Second, start planning early. You can start as early as 120 days before your mortgage renewal date. In many cases, lenders provide a rate guarantee for up to 120 days. This also gives you time to prepare all the documents necessary to qualify. And third, and I can't stress this enough, work with an experienced broker. Every situation is different and requires expertise to do it right. Also, many of these options are only available through a broker. There are so many more lenders than just the big 6 banks, ready to compete for your business. On that note, I'll put my contact information in the description below. Please feel free to reach out to me to discuss your needs. If you found this information useful, please like, share, and subscribe. As always, thank you for watching. Have a great day, and I'll see you next time.